Good morning. Today we're diving into a topic that's often overlooked, but can be surprisingly rewarding for patient investors. Let's talk about a clever way to approach the stock market when things are quiet, when a stock just drifts sideways, not really going up or down for weeks or even months. These periods, called range-bound markets, can feel dull, even frustrating, especially if you're used to chasing big moves. But here's the secret. They're actually ripe for opportunity if you know what to look for. Instead of waiting for a breakout or a crash, you can use strategies designed specifically for these calm stretches. That's where options come in. One of the best tools for this is the long-call Condor options strategy, a favorite among experienced traders for its balance of risk and reward. Don't let the name scare you. It's simply a way to profit if a stock stays within a certain price range. You don't need to predict a big move, you just need the stock to remain calm. Think of it as building a profit tent over a stock's price chart. If the price stays under your tent, you win. It's a visual way to see your potential profit zone. The long call Condor uses a mix of buying and selling options at different strike prices, which helps you define your risk and reward from the very start. You know exactly what you could gain or lose. If you've ever thought, this stock isn't going anywhere, this strategy could turn that boredom into profit. It's a way to make the most of slow markets, rather than just waiting on the sidelines. So let's break down how the long-call Condor works, step by step, using a real company as our example. You'll see just how accessible and practical this strategy can be. Before diving in, let's clarify what we're aiming for with the long-call Condor. This strategy isn't just another way to play the market. It's a specific approach designed for a particular type of market condition. Understanding the goal here will help you avoid common pitfalls and set realistic expectations from the start. Unlike income strategies that drip-feed you cash over time, the long-call Condor is a capital gains play. You pay a relatively small amount up front, almost like buying a ticket to a one-time event, hoping for a single defined profit if your prediction about the market is correct. There's no steady paycheck here, just the potential for a targeted payout. Think of it like buying a fixer-upper house. You invest some money now, put in the work, and hope to sell for a higher price later. The payoff isn't guaranteed, but the risk is limited and known from the start. You're not looking for ongoing returns, but for a one-time gain if everything lines up. With the long-call Condor, you're betting that a stock will stay within a certain range, stable, not making any dramatic moves up or down. This is a strategy for when you expect the market to be calm, not volatile. If your prediction is right, you close the trade for a gain. If the market moves too much in either direction, you take a small, predetermined loss. There are no surprises. Your risk is capped from the beginning. This isn't about building a steady stream of income. Instead, it's a calculated, one-off bet on market calm, a single strategic move rather than a series of ongoing plays. Understanding this mindset is key. You're not collecting rent every month, you're flipping a house for a potential profit. The focus is on timing and precision, not on long-term accumulation. Only use this strategy if you're comfortable with a defined risk for a shot at a defined reward. It's important to know your own risk tolerance and financial goals before committing to this approach. The long-call Condor is about precision, not chasing big wins. It's for those who prefer a measured, disciplined approach over high-stakes gambles. Make sure this strategy fits your overall investment goals and your personal comfort with risk before you get started. Taking the time to understand the purpose behind the long-call Condor will help you use it wisely and avoid unnecessary surprises. The long-call Condor's biggest appeal: you know your maximum profit and loss before you even place the trade. This is a defined risk strategy, no surprises, no unlimited losses. The most you can lose is the small amount you pay to open the trade, called the net debit. Think of it like buying a concert ticket. If the show's cancelled, you lose the ticket price but nothing more. Your profit is also capped, based on the structure of the trade. You're not swinging for the fences, you're aiming for a solid, predictable outcome. By giving up unlimited upside, you gain peace of mind and control. This makes the long call Condor ideal for cautious traders or those new to options. You get to participate in the market with clear boundaries. It's a strategy of balance, precision over speculation. Let's see how this works with a real stock. Let's use a real-world example. The Coca-Cola Company, ticker KO. Coca-Cola is a stable, well-known stock, perfect for a range-bound strategy. Imagine it's June 16, 2025, and KO has been hovering around $63 for weeks, rarely straying far. You predict this calm will continue for another month. No big news is expected, and the market is quiet. This is the ideal setup for a long call Condor. Your goal profit if KO stays within a certain range by the next option's expiration. We'll use options expiring July 18, 2025, and set our range between $61 and $65. With a steady stock like KO, you can focus on learning the strategy, not worrying about wild price swings. Let's break down exactly how to build the long call Condor strategy using Coca-Cola, ticker symbol KO, as our example. This options strategy is designed for traders who expect the stock to remain within a certain range and want to profit from that stability while keeping risk limited. To construct this position, you'll use 4 call options, all sharing the same expiration date, but each with a different strike price. This combination creates a unique risk and reward profile. Start by buying a $60 call. This is your foundation and gives you the right to buy KO at $60, setting the lower anchor for your trade. Next, sell a $61 call. This step defines your lower profit boundary and helps offset the cost of the long call you just purchased. Then, sell a $65 call. This creates your upper profit boundary, further reducing your net cost and shaping the core of your profit zone. Finally, buy a $66 call. This call acts as insurance, capping your risk if KO unexpectedly surges above your upper sold strike. So, to recap, you're buying the $60 call, selling the $61 call, selling the $65 call, and buying the $66 call, all with the same expiration date. The distance between the two sold strikes, $61 and $65, forms your profit zone. This is the range where you want KO to finish at expiration. Notice the $1 gaps on each end, between $60 and $61, and between $65 and $66. These equal width wings keep the structure balanced and your risk defined. If KO's price stays between $61 and $65 at expiration, you're in the sweet spot and can realize your maximum profit from the trade. This 4-legged setup is what's known as the classic long call Condor. It's a popular strategy among options traders who want to benefit from low volatility. The long call Condor is a logical, risk-defined way to bet on a stock staying within a range, offering a clear balance between potential reward and limited risk. Now, let's walk through how you'd actually place this multi-leg trade on your brokerage platform, step by step. Placing the long call Condor is simple with modern trading platforms. Enter all 4 legs as a single order. Buy $60 call, sell $61 call, sell $65 call, buy $66 call, all expiring July 18, 2025. The platform calculates your net debit, the total cost to open the trade. Suppose it's 30 cents per share or $30 per contract, since each contract covers 100 shares. That $30 is your maximum risk, plus any small commissions. Once placed, your trade is live and you can monitor its value as KO's price moves. The goal, for the Condor's value to rise as KO stays in your chosen range. You can close the trade early for a profit or hold to expiration for maximum gain. The structure keeps your risk small and your potential reward clear. Now let's see how profits and losses play out. Once your long call Condor is set, you wait and watch. Your best case scenario, KO drifts between $61 and $65 as time passes. Time decay works in your favor. The options you sold lose value faster than the ones you bought. At expiration, if KO lands between $61 and $65, you hit maximum profit. In our example, that's $70 profit on a $30 investment, a 130% return. If KO moves outside your break-even points, $60.30 and $65.70, you start to lose money. The worst case? KO finishes below $60 or above $66 and you lose your $30. The beauty, you always know your risk and reward. The key is patience. Let time and stability work for you. If KO stays in range, you win. If not, your loss is capped. That's the power of the long call Condor. You don't have to wait until expiration to close your long call Condor. If KO stays stable and your position grows in value, you can lock in profits early. To close, simply reverse your original trade, all 4 legs at once. If you paid $30 and can now sell for $55, you pocket a $25 profit. If KO moves against you, you might close early to limit your loss, say selling for $10 and losing $20 instead of the full $30. Having a plan is crucial. Decide in advance when you'll take profits or cut losses. Many traders aim for 50% of max profit or limit losses to 50% of the initial cost. This discipline keeps emotions out of your decisions. Closing the trade is as simple as opening it. One order and you're out. Manage your exits as carefully as your entries. Let's recap. The long call Condor is perfect for quiet markets, when you expect a stock to stay in a range. It's a defined risk, defined reward strategy. You know your max loss and max gain from the start. You build it with 4 call options, creating a profit zone between 2 strikes. We used Coca-Cola as an example, but the approach works for any stable stock. The key is patience, discipline, and a clear plan for entry and exit. Start small, use familiar stocks, and focus on learning the mechanics. Even in calm markets, smart strategies like the long call Condor can turn boredom into opportunity. With practice, you'll add a powerful tool to your trading arsenal. Thanks for watching. Good luck with your trades, and see you next time.